Oil prices continue to rise, supported by signs of recovery in fuel demand and hopes that the pandemic will end soon. Amid this positive background, the currencies of emerging markets are also gaining ground. On Tuesday, the Russian ruble opened the session with a sharp rise, boosted by external factors, including possible fiscal stimulus in the United States. On Monday, Brent crude closed the session adding 1.5%. Today, oil prices opened the trade in positive territory, moving moderately higher in the early session. At midday, Brent oil futures went up by more than 1%, having reached $45.44 per barrel. WTI contract with the nearest expiry date was showing similar dynamics. American crude climbed up to $42.50. Today, investors will keep an eye on crude oil inventories data published by the U.S. Energy Information Administration. Currently, there are no obvious reasons for oil prices to grow. On the other hand, oil is probably catching up on the rally it has recently missed. A sharp rise in crude prices can be expected tomorrow, especially if the U.S. reports a significant decrease in crude stockpiles for the third week in a row. However, this price driver is likely to be short-lived. The overall optimistic sentiment is supported by the news from the United States. As the spread of the virus in the country has slowed down, market participants hope that economic recovery in the United States may soon accelerate. A weaker US dollar also helped support high oil prices. Besides, the expectations of new fiscal stimulus in the United States boosted market sentiment. Thus, top congressional Democrats wanted to meet with Donald Trump to discuss coronavirus-related economic relief. Currently, in the United States, oil refineries are traditionally shutting down for maintenance, so Brent crude will have high chances of hitting $50 per barrel unless US-China tensions escalate. Yesterday, the ruble closed the session, ending slightly higher against the US dollar. Today, the Russian currency showed a sharp rise. As a result, the dollar-ruble pair lost nearly 1% in the day, trade to reach the level of 72.78. In the short term, market participants expect the greenback to slide below the mark of 73 against the ruble. Yet, in the midterm, the outlook for the ruble remains rather pessimistic. At the moment, the level of 72.60 serves as a strong support for the pair. Emerging market and commodity currencies are displaying positive dynamics, mainly thanks to favorable external background. As for the local factors, a significant drop in demand for foreign currency is associated with a season of dividend payment in Russia. This situation can also benefit the ruble. In late July and early August, however, this factor put a lot of pressure on the Russian currency. Investors hope that China's response to US sanctions will be the final phase in the conflict. Trade talks between the two countries are scheduled for the end of the week, and market participants pin high hopes on the outcome of negotiations.